Assalamu alaikum wa rahmatullahi wa barakatuh. Hello everyone, and thank you for joining OEB's Online Learning Hub. My name is Lina Al-Atasi. I'm the Head of Innovation at Oman Arab Bank. We've had an interesting lineup of innovation workshops this week, focusing on how to turn your idea into a POC, how to create an effective business model canvas. And this evening, Hamood Al Fanna, Investment Associate at IDEO Investments, will share his insights on the various stages of funding and how startups can seek funding support from VCs. For more information about our workshops, please visit Oman Arab Bank's social media pages. If you have any questions during our discussion this evening, please ask your questions in the chat window and they'll be addressed by our speaker. Otherwise, if you'd like to join this discussion, please raise your virtual hand and we'll call on you. Hamood, thank you for joining us this evening. Some of our participants may want to start their own business, but don't know how to obtain funding. How can they get it off the ground?
Thank you for having me. So, as a introduction, I'm Hamood, Investment Associate at IDEO Investments. Our job at the investment team at IDEO is to source and diligence and execute VC deals on behalf of IDEO, which is the VC technology investment arm, the Sovereign Wealth Fund of Oman. And we've been operational since 2017, and we have about 13 investments to date and we look into globally exciting companies with the vision to bring them to Oman. So in terms of your question on how to launch, how entrepreneurs can kickstart their business, I think it's mainly, can you hear me now? Can you hear me well?
Yes, we can hear you, Hamood. Please go on.
Yeah, so in terms of entrepreneurs trying to kickstart their business, of course, there would be a time when you would have little funds at your disposal, and I think that's a time when you have to, of course, foresee a problem that you feel passionate to solve, and you have a skill set that you want to utilize, and you would like to bring a strong team of people to be able to solve that issue. So usually startups can have very, very humble beginnings, and if you remember, Google as an example, started out of a few big companies started out of garages. So starting out in a very lean scale, very minimal scale is quite accepted in the VC industry. So in the end, I think it will be a time for you to actually formalize your strategy and try to get a good roadmap of products that you would like to put out that would be able to solve existing challenges that you would like to solve. With time, of course, there would be certain milestones that you'd have to achieve to go through different stages of financing. But I guess at the beginning also, a lot of entrepreneurs put in their own money, first of all. And secondly, they take the money of friends, family, and fools, we call it. So it would be some form of limited capital just for this company, to be able to just kickstart and perhaps buy some raw material that they need for their experiments and for their R&D in order to be sufficient for them to actually come up with quite a good product roadmap they can just test out and check out that it works. And once they have achieved good milestones, that's when typically some larger investors like seed investors or institutional investors can come into place.
Great, thank you very much, Hamood. Would you be able to talk us through the various stages of funding, please? What are the considerations that startups need to have when approaching VCs?
Sure. So in VC, there are generally, the earliest stage is usually the angel or friends, family, and fools financing. So angel investors are all over the globe. Angel financing is at the very angel, friends, fool, and friends, family, and fools financing is at the very, very beginning stages, and that's the most risky stage of VC. But you find a lot of angel investors who would, try to capitalize by just, having some form of spray and pray model. So the most important thing for them is to just see that the entrepreneur is strong, that they have a sufficiently strong team, and they believe in their vision, and they would give them that money to kickstart it. And if it doesn't work out, then it's fine, because other investments can recompensate for their losses in certain investments. After that, there would be the seed financing. So seed financing is one. Some perhaps institutional investors can come in, or private family offices can come in, and they would give you a certain amount of money. That would usually, of course, the later stage of financing, the larger the ticket size, the average ticket size that we would see in each investment. So as an example, for seed investment in the US, it would also depend from country to country. But on average in the US, seed financing would go up to around, on average, about $5 million or so. After that would be the Series A financing. So after you have covered certain milestones to achieve what you set out to achieve in the seed, would be the Series A financing, and that's when you'd approach investors that are quite accustomed for that stage of financing. And after that, there would be Series B, Series C, Series D, Series E. And generally, of course, the main success route in VC is to eventually, for all these VC investors, to exit their shares and have a good return on invested capital. And that would usually be one of two routes, whether it's an initial public offering in any stock market, as example, the Muscat Securities Exchange, or even you see, of course, a lot of companies that IPO in the US and NASDAQ, and you even see circumstances where European or sometimes Southeast Asian companies IPO on the NASDAQ just because they actually have fulfilled the criteria to IPO there. But generally, a lot of companies try to go through the trade sale route, which is when a large corporation, whether in any industry, for example, in medtech, where these huge guys like Medtronic, Smith & Nephew would be interested in the technology that this company has compiled, and just the very good data that they have compiled from the clinical trials, perhaps they have commercialized, and of course that would depend on each industry. But generally, that would be the end of VC. Once a venture capital stage company actually gets acquired or actually gets pushed out of the VC stage to go into much larger tickets, which would be categorized more as private equity financings. And that would usually happen when the VC companies have attained cash flow break-even, which is when they have generated sufficient profits.
Great, thank you. What would be the average ticket size for Series A funding, Series B, Series C, etc., just to give our audience a bit more clarity?
Sure. So there is no rule of thumb, I think. It changes with time, and it changes, according to the geography as well. So US or North American companies tend to raise much larger financing rounds, and usually their valuations and their pricings would be much higher than companies elsewhere, just because of the excessive amount of money that's present in the US. But generally, I would say, but of course, it's not a rule of thumb. A Series A can take form of any place from, I think, on average, I think $10 to $20 million. A Series B anywhere from 20 to 30, a Series C from 30 to 50, and so on. So it would increase by about, and there would be an incremental increase of about 10 to 20 million USD in each consecutive financing round on average. But it's not a rule of thumb. As I explained, it just depends on the company's status and the industry and the geography that they're in.
Okay, great. And how can they prepare for the pitch to VCs or potential investors? Who can they approach for funding?
So, of course, you have to understand the stage that your company is at, and you need to approach investors in a good way. In the end, you as an entrepreneur don't have a lot of time in your hands. You want to build this business, and you want to capitalize well on it and use your time efficiently. So trying to plot out suitable investors for your company is key. So as an example, if you're a Series A investor, you wouldn't want, if you're a Series A stage company, you wouldn't go for a really late stage investor who would, for example, want to see a much less risky investment and would typically go in at the Series D stage or so. So you need to do your homework. You need to understand the VCs that you want to talk to. You need to see VCs that can accommodate to the investment round, the total fundraise that you're looking for, as well as, of course, them being able to be comfortable with the sector that you're operating in. And thirdly, of course, this comes with highly successful companies and entrepreneurs, is trying to only target VC companies or VC investment firms or funds that have been very successful in helping their portfolio companies grow. So generally as an entrepreneur, I would like to get as much as possible like really sharp names on board, because they would help me on a whole lot of things like commercialization, like I don't know if there can be channel partnerships, But in any case, the VC's main advantage is being able to help you also raise consecutive fundraisers. So just having a good mindset of the investor that you want to approach is key. The way that you want to approach them after that will depend. So for example, you can get a third-party introduction. I think that would come a good way. Of course, you as an entrepreneur have to conduct yourself in a way and have to increase your reputation in a good way in the market, so that these VCs know that you have compiled a good team, and they would consider, and they would actually take the time and effort to consider the opportunity and dig into it, as opposed to just looking at the pitch deck from email and just setting it aside. So third-party introductions would be good, but also what can happen is direct interactions, and it can happen in many forms. Like, for example, meeting them at social events if you're meeting for the first time over at a conference, and that's when you can just get talk to them about your company in a good way. I think that would be a nice first step on the door. Let them understand what it is that you're doing and why you're passionate about what you're doing, and that would, I think, come a long way. But of course, a lot of opportunities come through agents. So as an example, agents usually take a commission. So if they pass a VC an opportunity and the VC decides to invest into that opportunity, they would take a certain agreed upon commission. But yeah, so generally, pitch decks can also be emailed to the VC investment firm or the fund, and you need to have it blotted out in quite a nice way. So the beginning step, of course, is having a non-confidential deck in place, and that non-confidential deck has to be accustomed to the type of investor that you're going to approach. So, for example, if I'm a medtech or biotech focused investor, and the company is actually a medical technology company that's, for example, developing an innovative diabetes 2 treatment, then having, adding on some more technical elements to the presentation would be good. But if, as an example, you're looking at an investor that's not too sophisticated, perhaps, and not very industry specific, then try to perhaps just lighten it a bit on the technical scale and try to focus on the opportunity on the commercial and partnership scale. So generally, the pitch deck, the non-confidential deck, I think has to be quite brief, and it has to be, I'd say anywhere between 10 to 20 pages, and you have to blot out exactly, send out the message, as they say, in the least, the most effortless way possible, in the because in terms of time, VC investment firms and funds are quite constrained, so they want to see good snapshots of the opportunity that they're looking at. So as an example, you need to just outline in general, of course, the problem that you're solving and the solution, and you blot out generally your business and revenue model, the secret sauce, of the company, how it's different than competition. So as an example, if you're an AI or a blockchain-enabled company, you have to actually bring out, explain the value add. Why does this technology actually, why this AI or a blockchain element is actually adding value in the end? Because there's a lot of buzzwords in VC, and in the end, there are limited amounts of technologies that can actually create value. So you need to really prove that in terms of the data points that you have compiled since the onset of commercialization. And of course, competition. It would be good to have a snapshot of competition, who you think your main competitors are. It can be large corporations, but of course you can just blot out and highlight how these large corporations don't invest so much into R&D or not as lean as your startup, and how you're much more, of course you're much more lean and able to accustom and change your strategy and change in your business and revenue model accordingly, which is something that perhaps can be really made with a large corporation. And of course, there would be some other competitors like VC stage companies. You need to just you need to outline how further you are in terms of the milestones that you have attained. It might be, for example, if you're an e-commerce company, just blotting out how many orders you're getting per day and how the industry average is. Or for example, the number of customers, if you're a B2B company, how many customers or partners you have in the pipeline. And of course, in terms of, you also have to compare in terms of financial traction. So of course, there has to be a financials element in the non-confidential deck as well. VCs generally like to see what kind of revenue has this company been generating, especially in the last 12 months, and how much are they forecasting in the next 12 months, and what's the proof behind them being able to justify the forecast or an uplift in the next 12 months. Generally, I think the later stage the VC company is, the clearer the idea about what kind of financials or revenue generation they would be able to generate in the next year, or 1, 2, 3, up to 5 years. With an early stage company, it's quite accepted in the VC industry that these numbers tend to not be so accurate, but it's fine, as well as you kind of have an idea of where you're in, and you would accustom your business model and your strategy around that. And most importantly, the team. I think the team, and that's something that the VCs think about all the time. The team is the most important element in any company. They need to see that there's a good skill set, potentially a good combined years of experience. So, as an example, if I'm an energy company, for example, doing an energy monitoring device, for example, I would be impressed if I see so many combined years of experience in the likes of Schneider or Honeywell or these big energy companies. And for example, if you're a medtech company, you would be incentivized to see someone who has many combined years of experience in big medtech companies like Medtronic, like Smith & Nephew, and the like. So it's very important, I think, to bring out the team element, because that's the main thing that the VC is going to invest into. And of course, just the current status of the company, what kind of, in general, just the milestones that you've achieved to date, and how you see your vision going forward, and how you think the shape of the company would be in a few years' time.
Great, thank you. So just to summarize, Hamood, what would be the 3 main criteria for you to consider when you're investing in a fintech or a startup in Oman, and why?
Speaking on behalf of IDEO?
Yes.
Okay. Yeah, so I'm not, to be honest, I'm not a fintech specialist. There are a few colleagues of mine who are more dived and a bit more acquainted with the fintech space than I am. But I think IDEO is, we mainly focus on the later growth stage, and we don't look at ideas. Even if you say that you have an exciting product or technology, it needs to be implemented, and there has to be some form of proof of concept one way or another. So generally, I think seeing with fintech, I guess, I would presume it's mainly the amount of partnerships that you're able to nail and underscore, the amount of banks who would benefit from your platform, or the amount of traders or the amount of consumers who are actually going to benefit from the platform, at least that you have compiled to date, as well as perhaps a proof that you were able to make some money. Is there, how has the last 12-month revenue been, and how do you forecast it to change? And if there has been so much revenue, you have to bring out a good story of how that revenue plug can be switched on some way or another in the future. Does that answer your question?
Yes, thank you very much. We've got a number of questions from our participants. So there's a question from Mohammed. Who are the largest players when it comes to angel investors in Oman?
Sorry, can you say it again?
Who are the largest players in terms of angel investors?
So I think there are, of course, in Oman, we do foresee that there might be a few gaps in terms of the financing cycles. But angel investors, what I've seen is a lot of these wealthy individuals. So these would be, of course, I can't just blot out the names here, but these would be the people who would be best to approach in terms of angel investing and perhaps getting your company started. Also, perhaps some of these big private family offices might be incentivized, to strategically partner with you, because they see that you have a great idea and you have the skill set to actually develop the technology, and they might be able to incubate you. But of course, there are other, I guess the most well-known accelerator incubator here in Oman is Oman Technology Fund, and they focus at the quite early onsets of company founding. So they have a team to coach entrepreneurs, new entrepreneurs who would like to just kickstart their business and try to figure out their business and revenue model in the best way possible, and just try to develop their product.
Great. Just alluding to your comments earlier, there's a question that's related to investor events or pitch events. Does Oman have any events where entrepreneurs have the opportunity to meet potential investors? And is there an interest for foreign investors or VCs to invest in an Omani startup from your point of view?
Yeah, I think the ecosystem in Oman has been growing at quite a good scale. I mean, the VC ecosystem here is quite nascent, especially when I started in 2017. I think there was quite a low propensity of seeing VC stage companies that would, that are actually developing in a good way. But generally, I mean, I'm really impressed at the amount of how the Omani VC ecosystem has really matured. They tend to understand exactly what it is that investors want. In terms of them being able to get funds from outside of Oman, I think that is doable. But they really have to have that mindset of that ambition to scale abroad. So we see a lot of companies that are trying to be too Oman market focused. And I think that as an entrepreneur, you have to be much more ambitious, you have to be much more daring, and you have to try to go out there and just shoot to the moon and conquer the world and try to at least dominate the GCC area. And generally, I think foreign investors, especially in North America, and Europe, they would generally be interested, and general companies would be able to. General companies would be able to catch their eye if they would be more focused on actually expanding to the GCC and trying to dominate the GCC and not just being too Oman intensive. What was the other question? Was it in terms of Oman having events?
Yes. So do we have any pitch events or events where entrepreneurs could meet potential investors?
Yeah, so I think that we are trying to, us as IDEO, we're trying to incentivize the VC ecosystem here. We have done a few investments here locally, although we're growth stage investors, but we have done a few investments here. So there would be, I'm not sure if anybody knows about Rush, which is a startup hub that IDEO has launched. And we're going to try to actually work around this and see how all Omani startups, the Omani startup ecosystem can be very engaging with this. And I would incentivize all Omani entrepreneurs and startups to try to register on the platform. And in the future, I think we would try to make some plans and host some events where a lot of experienced foreign entrepreneurs would come here and just showcase their experience to Omani entrepreneurs, and I think that would be quite valuable for them. And generally, we would try to get some foreign investors to join and just see the skill sets that are actually developing in-house here in the country. So there are a few events, but I can't, I don't have them memorized by mind. But generally, it's something that we as IDEO would engage more.
We've got another question from Hussein. When is the right time for an already seeded e-commerce startup to seek its first round of investment?
I think that, that would depend. That would depend usually on, that would depend on the plans of the company, on what you're, in the end, you can be as lean as you want. So as an example, you can perhaps be confined to a certain, for example, certain revenue generation range, and you would feel as an entrepreneur that it's enough for me to just keep this whole company to myself. But actually, I don't think that's the right mindset. In the end, you have to let investors come in abroad, because in the end, you're getting a certain amount of pie right now with yourself as an entrepreneur. And once you get more and more investors to grow your business, of course, the pie increases, and your share would be larger in proportion to the share that you had beforehand without any investment. So I think that would the financing raise has to be done by the entrepreneur, and that solely depends on the strategy of the entrepreneur, of what exactly they want to achieve, and that can be also tranched out. So as an example, if they feel that they need $5 to $10 million USD to dominate the Oman market, then that can be tranched out, and then perhaps in consecutive financing raises, they can further carry out their plan and just go on and try to dominate other markets outside of Oman.
Thank you, Hamood. There's a question in terms of, from a student standpoint, for students who are looking to start their own businesses, are there any exclusive events? Perhaps I can comment on this one as well.
Sorry, would you like to comment first?
Please go ahead.
Okay. So in terms of, was it students attending events?
Yes. So student exclusive events to meet potential investors if they have an idea that they'd like to turn into a business or a startup.
Correct. So I think that there are institutions here, investment institutions in Oman that are very catered to that, and that would primarily be Oman Technology Fund. In terms of VCs that are quite early stage here, that would look at the ideas of different students. There are primarily two that are the most known. There's Oman Technology Fund and Phase Ventures, and both of these, I think, host quite a good number of events where students can come in and pitch their ideas. So Phase Ventures is quite active. For example, they host Spark, they do Spark Labs, and OTF also has certain events. They have the Taqween program as an example. So generally, these two would be foremost the two best VCs to approach, especially when you're at a very early stage. IDO, of course, would come at a later stage, at somehow the Series A or B stage, once these companies have had enough traction.
Great. There are also a number of incubators and accelerators that we've got in Oman for students looking to launch their ideas. Oman Arab Bank, for example, if I could just comment on this, runs an annual hackathon for students who are interested in pitching their proof of concepts. Usually these run once a year. Inshallah, once everything goes back to normal and it's safe to do so, we will be running our hackathon towards the end of this year or beginning of next year. So there's an opportunity for students and fintech companies to join this challenge or competition. And then we will help accelerate their growth in their business. So there's a question from Hussein. How do I evaluate my startup for VCs?
Great. Yeah, that's a good question. So you have to have, before you approach VC, you have to have a certain periphery or evaluation range. So you have to understand, you have to, of course, in the end, the investors would conduct their own analysis and they would usually submit you a term sheet with the valuation that they come up with. And, it can be a bit of a negotiation cycle. But generally, as an entrepreneur, I think that it's up to you also to understand the value of your company. Usually, that would depend on industry. So in the end, it's your homework to see how the company, the industry that you're operating in, how the company stacks up against comparable companies as an example in that space. So as an example, if I'm a Series A company, I'm doing e-commerce, I would try to see a company, for example, out of Indonesia or Singapore or the US that has attained somehow the same milestones that I had, and they have received X amount of valuation. Generally, also there are other accepted valuations in venture capital. We primarily use revenue multiple or DCF or EBITDA multiple if the company is revenue generating. So as an example, if you're an e-commerce company and you have generated $1 million in the last 12 months, and as an example, you forecast $3 million in the next 12 months, you need to see what revenue multiple ratios are out there in the market. So revenue multiple trading ratios. So it might be, for example, 9x, 10x, 11x, 12x. Depends on the industry, of course. Some industries have lower revenue multiples, and some industries tend to have higher revenue multiples. So you need to understand the average revenue multiple, or if it applies, the average EBITDA multiple. Of course, in terms of EBITDA, it would be quite difficult to apply it because most VC companies are highly cash burning, and their EBITDA would be negative. But I guess in most of the cases, it's the revenue multiple ratio that you just have to keep into respect and And that's what you plug in to whatever milestone that you have achieved. So as an example, if the average revenue multiple is about 10x and your company has generated a last 12-month revenue of 1 million, you would say that, it would be, a plausible valuation would be somehow in the $10 million range. But of course, it's up, in the end, it's up to the investor to come up with a valuation, and that would give some framework for you to negotiate with them. If you think that the valuation is outrageously low, then of course you as an entrepreneur have to be quite wary of it, because in the end you don't want to get diluted too much, especially if you're constantly raising financing rounds. And as a VC, I see that you are raising a Series D and you have lost already 70 to, I don't know, so much stake in the company, then that would be a red flag for me. That would be, you don't have enough equity stake in the company and hence would be incentivized enough and be able just to control the, control the steering of the business in a good way.
Thank you, Hamood. There's another question on if you're as a VC are looking to invest in an early stage company, what are the percentage of shares that you would typically hold? Obviously, it depends on the round series and the valuation of the company, but do you have an average?
No. So us in IDEO, we don't have a target, target percentage ownership stage in whatever company we invest into. We just check if the opportunity makes sense on a financial return basis as well as a national impact basis. And we check that the valuation, of course, the price is right. That's the most important thing. But yeah, so it can vary. The amount of ownership that we take in a company would vary, and we don't really have a target percentage range. Generally, we want to be a bit more, of course, I wouldn't categorize us as very active investors. I would say we're somewhere in the middle, and we try to be hands-on with our entrepreneurs. Of course, we can want to back their vision, but in the end, it's their company, and they're the ones who know the industry and know the ins and outs much more than we do. So generally, we don't have a target percentage ownership stake at IDEO.
Okay, thank you. Have you seen a shift in your investment appetite during the pandemic? And I know we've spoken about this earlier, but has there been a change or a shift pre, during, and now post this pandemic?
Yeah, I think this pandemic has posed a lot of opportunities. In the end, that's a good, it's a good remark. There are a lot of VC investment funds and firms who have actually stopped allocating capital, and they're allocating it simply to their portfolio companies, because in the end, these portfolio companies, some of them might be deeply impacted by this pandemic, and hence they would need to raise more cash until markets recover. So of course, markets in general, of course, some companies might have an exception because they have exceptional teams, or they're in an industry which is not affected so much by COVID-19. But generally, they need to just postpone, a proper financing round until this whole COVID-19 situation finishes. In terms of us as IDEO, I think we're still on the lookout for exciting opportunities, and I think there's still a lot of opportunities to take out of this pandemic, specifically because prices are more realistic. Unfortunately, especially in looking at North American opportunities, valuations and prices have been quite fiery in the last year or two or so. And we forecast that the prices would tend to become more realistic and just succumb to its actual realistic range. So we're still on the lookout for opportunities, especially in industries that haven't been affected so much by COVID-19. I think there are so many. There's e-commerce, there's marketplace, there's virtual learning. There are a few industries that even that have the opportunity to grow immensely at these stages. So we're definitely on the lookout for these kind of opportunities.
Thank you, Hamood. Perhaps this is a very generic question, but where do you think the opportunities lie for startups in Oman? Where are the gaps? Where are the opportunities for them to grow, and the areas that they could focus on going forward?
Yeah, that's a very general question. So, is it, sorry, if you can just clarify, is it...
Industries that you see growing across the region that you think perhaps Omani startups have the opportunity to explore and leverage?
Yeah, I mean, I think there are countless opportunities. I mean, there is a lot of work that hasn't been done in the region, whether it's even in the food and beverage space. I think they can, entrepreneurs can really leverage from the government's vision on different fronts. For example, in terms of enhancing food security for the country, as an example. As you're a biotech, for example, if you're a biotech company and you want to make some good preservatives, that would just prolong the length of Omani exports. It's just an example. Of course, there are countless opportunities to be done here in Oman. And of course, as an example, there are a lot of med tech and genetics companies that have formulated some good medicines and good molecules of treatment, but they wouldn't really need to have that kind of population specimen. And us in Oman, as an example, there might be, opportunities in terms of the medtech and biotech space that would be very tailored to the Middle East population. So I think there are countless opportunities, especially when you look at our government's vision for 2040 and how we want to make, for example, learning virtual, and how we want to have better educational technologies, how we want to enhance food security, how we want to implement smart cities, smart city elements. So as an example, smart city in itself is just a huge thing. I mean, there's so many energy management systems that can develop, or just automation systems that could, for example, improve the reliance of the grid. So there's definitely so many opportunities still to be done in the country.
Thank you very much. There's a question or a request if you could share a few resources, whether it's books or websites that you would recommend for people who would like to find out more about VC investments.
Yeah, I think there is a very good book by sorry, I forgot the author. It's quite a famous book.
Perhaps we'll share the sources later, Hamood. We can reach out to you separately.
Yeah, sure. It's called, the book is called Venture Deals: How to Be Smarter Than Your VC and Your Lawyer. Sorry, I was just trying to memorize, because I think it's a very good thing for you to read as an entrepreneur. So please look it up. Venture Deals: How to Be Smarter Than Your VC and Your Lawyer, than your venture capitalist and your lawyer. It gives a very good, I think, introduction to entrepreneurs, the world of VCs, and how you should approach VCs, and just controlling for certain parameters of whether you're an early stage or late stage company. The go-to book for any entrepreneur.
Thank you very much. Do we have any other questions from our attendees? If you'd like to ask Hamood any questions directly, please raise your hand. We've got a question from Raman. Raman, I'm just enabling your mic. Hi, Raman.
Hi. First of all, I'm saying thank you to Mr. Hamood for his very good contents. Just in Oman, how we can find a mentor to get the fund? Because normally the startup people, they don't have enough knowledge regarding the fund, the series pre-seeding, seeding, series A, B, C. They don't have enough knowledge, and they don't know how to find and how to select and how to evaluate. Is there any people or any part of companies who can do this kind of the services? Because normally they don't have money to pay for the high engaged peoples to pay their fees, or they don't finding them normally, and they are in the first stage. In the pre-seeding, seeding, and the level A, maybe how they can find the peoples? This is my question.
Thank you, Raman.
Thank you, Raman. Yeah, so I think the only one-stop shop for Oman, especially for companies that are at quite early stages and want to get some more coaching and mentorship, I think is the Accelerator, which is a part of Oman Technology Fund. So they onboard a cohort of companies every once in a while, and they make sure to mentor them and to coach them, as well as give them some funds. And they would be expected to try to to achieve certain milestones, going forward, if they would be able, that would determine whether they would be able to continue to receive funding. So I think Oman Technology Fund is blotted out in a nice way, where they would start off at the very beginning stages of when these entrepreneurs want to get some more mentorship and coaching, up to, for example, mid-small stage investments, up to larger investments. So they have three funds under Oman Technology Fund, and I think Wadi Accelerator would be the best shop to start that.
Great. I think we don't have any more questions, Hamood. Thank you. That was really interesting. I hope it's managed to give our participants a better idea of the various stages of funding and what they need to do in order to approach VCs, how to be better prepared, and the areas or opportunities that they could look at going forward. Thank you very much for joining us today, and thank you, IDEO, for your continued support. We hope you've enjoyed today's session. Our next session, which will be held tomorrow at 10 a.m., will focus on what it takes for startups to succeed, and it'll be delivered by MasterCard. If you'd like to register for the session, please visit our social media pages. Thank you very much, everyone, for joining us. Thank you for your engagement and participation. Thank you, Hamood. We wish you all a very lovely night, inshallah.
Thank you very much.
Thank you.